Welcome to the NGEN Markets Training session. Meanwhile, others are joining in, we will start with today's session. So, the topic for today is portfolio analytics. So, first step is we are going to review the asset allocation of the mutual fund portfolios. We will analyze the portfolio performance and also the contribution of the securities in the portfolio, and we will also take a look towards the diversification of the portfolio by using tools like correlation analysis and even the position overlap, and how you can effectively diversify for portfolios. We can take a look into that as well. And then we will head towards the Q&A section. So we will open the forum for Q&A. So anybody who has any questions, you can either write it on chat box or verbally, and we will try to address them. So let's take a session ahead for the portfolio analytics. So I'm going to share my screen for the engine portfolio analytics. You can see the terminal here. And what you can do here in the portfolios is we're going to head towards the portfolio section to run portfolio analytics. And we're going to analyze the portfolio based on the three parameters we are going to be covering today. So the first step is to add in the portfolios. So you can add any particular set of a portfolio by using a statement analyzer, number one, or either through an ISIN from Excel. So you can add in an ISIN from Excel, and once you copy and paste those data sets, the external client gets onboarded into the system, something like this. You can do that similarly for a statement analyzer. So statement analyzer is one place where you can input NSDL, CDSL, and even CAMS reports. And once you're done, you can click on this plus button to add the entire set of a portfolio into this tab. So that's how you can do that. And secondly, once you save this portfolio and run it, so we are going to run this portfolio and we are going to review this portfolio based on the three parameters. First parameter is the asset allocation. Now, as you can see, this is the new portfolio onboarded into the system, and there are a couple of things we need to review before going ahead with the performance and the contribution of any portfolio as well. So here, what you can do is we are going to add one stock here to get more idea about how the asset allocation works in engine markets. So let's say you click on this edit and save, and I'm adding, let's say, Sun Pharmaceuticals, and I'm adding another stock, which is ICICI Bank. So let's say a portfolio is having a stock based exposure in the, with the mutual fund as well. So you can add in those particular stock. Once it is added, once I run this, now you can see those funds are being added based on the asset allocation. Now you can review effectively that, Sun Pharmaceuticals is one exposure which is coming from stock and also from a mutual fund. To check that, I'm just going to click on this I button. So when you click on this I button, you can see that there are two holdings which are coming from mutual fund, which are the causes of those exposure. Another one is a direct holding, which is a stock exposure, which the client took based on the individual stock. You can check that for ICICI Bank as well. Once you click on it, you can see that there are a couple of holdings coming from couple of exposures coming from the mutual funds, but one holding is direct holding from an individual stock. So that's how the analytics works out when you are taking a look towards asset allocation on an exposure level. So what about the debt side? So we can currently see that we only have equity based mutual funds. So let's add in a debt fund as well. So let's add in a credit risk fund here. So we are adding it here itself. And once we add it into the system, you can easily rescale them to 100 and run it. So I'm adding another fund, which is HDFC Money Market, and you can run it. So once I run this portfolio based on the debt allocation as well, so we now currently have one credit risk exposure, another is a money market exposure. So what you can do is you can see here that there is 18% exposure now in our portfolio from the debt side. Now, what if I want to take a look towards on a breakdown overview of this entire asset allocation? How do I do that? All I need to do is click on this detailed view. The purpose of this detailed view is to break down the debt side of it. So when you click on this, you can see the NCD, the CODs, which is certificate of deposits, commercial paper, T-bills, all are being updated into the system. Now, when you click on it, you can see all those exposures. And if you click on this I button, you can see from where these exposures are coming from. So for an example, the CODs, which we currently are viewing, is coming from both the credit risk and the HDFC Money Market Fund. So that's how you can take a look towards on the equity side and even on the debt side of any portfolio analytics as well. Right now, let's go ahead with the concentration. So concentration is another great way to know that if the portfolio is highly concentrated or not. So for an example, you can check this top three exposure. Top three basically means the top three individual exposure of the mutual of the exposures coming from the mutual funds or either a direct exposure. So how you can recognize this top three? What you can do is you can head back to the overview section and you can click on this show all. When you click on the show all, these are the top three exposures. So definitely the contributor of the top three, one of them is Sun Pharmaceuticals. The second best contributor is ICICI Bank, which includes our direct holding in our entire portfolio, right? And when you see the contribution, yes, 20% of the top three holdings are contributing in the portfolio. So these are the concentration and these are kind of like a risk. So I'm holding two stocks which are concentrating more than 16 to 20% in the top three exposures. And you can also see the top 5, top 20 and top 10 exposures in the system. We also have the equity market cap exposures, which helps you to determine between the mid caps, large caps, and the small cap exposure on an equity side of a portfolio. So what you can do is here we have given a toggleable button. So once you click on this as of percentage of equity exposure, you can now see the capitalization based on the equity side of it, right? So you can see that 15% in small cap, mid cap is 36%, and the large cap is 47.51%. So that's the overview of the concentration tab. We have four more tabs. So we are going to explore these tabs as well. One of them is an AMC exposure. So if you would like to know that if the entire portfolio is truly inclined towards one AMC or not, you can check that through the AMC exposure. Once you click on it, you can also see which are the funds which are having high asset allocation through that AMC. So I can click on Aditya Birla, I can click on DSP, and I can see that DSP midcap is the one which is giving this AMC exposure. Similarly, for the types of the funds and the categories of the fund, if you want to recognize that if I'm holding these 13 items out of these 13, 11 are mutual funds, when you click on it, you can definitely see that I'm holding 75% in equity and close to 19% in debt. Now, you can also see the fund categories here, which includes the credit risk, the money market, and even the mid caps, large cap, and flexi cap categories in the system. So this helps me to determine what kind of categories the portfolio is currently holding right now. And you can also check on a sectoral level that if the portfolio is truly concentrated on the sector wise allocation. So for an example, if I click on this equity sectors, I can easily see my concentration towards pharmaceuticals is fairly high. You can see it's 24%, which is close to 25% of the entire portfolio. So one out of the fourth pie of the entire portfolio, I'm holding pharma. So when I click on this pharma, you can see all the stocks in pharma. And one of the exposure which I've taken a direct exposure in is Sun Pharmaceuticals. So that is how you can recognize, even on an equity sector level, that are you concentrated towards one particular sector or not. Like another example is banking, pharma and banking towards contribute more than 35%. So you can definitely see these stocks in banking and what are the stocks which are contributing highly. One of them is highly, which is concentrated is ICICI Bank, right? And you can also download these sector exposures in an Excel format, which is very, very useful. Another one is a debt side. So my purpose of adding some debt funds in the portfolio analytics was to show you that how engine analytics shows you the debt side of the portfolio. So for an example, when you see this portfolio credit ratings, right? So in this portfolio credit ratings, what you can see is as of portfolio credit rating, these are the ratings given here. Similarly, you can see the average maturity and the duration of it. So average maturity of iProve credit risk is 2.32 years, and you can see the average duration as well. And you can see the entire average maturity and duration of the portfolio based on the two funds which we are currently holding, which is HDFC Money Market and one is credit risk. Similarly, you can see the average of the YTM of the entire portfolio based on the two funds which you are currently holding. If let's say on a hypothetical sense you have added couple of more funds which are on the debt side, you would see more data sets which will be contributing towards the average YTM of the entire set of a portfolio. And then you can also see all these data sets which are all the debt securities which are contributed, which are exposed through these mutual funds, downloadable in an Excel CSV format. So you can download these all in one single go. So that is how the asset allocation pans out in the portfolio analytics of any particular set of a client you have loaded. This includes even an existing client. We have a client section where asset allocation is fairly identical. You can take a look towards that. The number two is to take a look towards the performance of the portfolio. Now, talking about the performance, when we see this portfolio is basically some of the current units and the values what the client is holding right now. So, what is this performance? This performance is the historical backtest of the current holdings of the client's portfolio. So comparing, I'm just going to remove this reference index from here. You can click on it and remove it. And what you can do is you can see this historical backtest is the historical backtest of the current holdings, which is Nippon India Pharma, India Power and Infra funds, all these funds and the stocks as well. And this is what the backtest is. Now you can choose to have one particular start date. Let's say we are taking a backtest of a 5 years ago. You can change it accordingly on a customized basis, but this start date is a start date of the entire analytics of the portfolio. Number two is what you can do is you can choose to have a separate benchmark. So, we have given custom benchmarking and you can also do the reference indexes as well. So within reference index, you can see it is considering 80% Nifty TRI and 20% CISL bond. Why is that? Because of the fact that we have asset allocation close to 80 and 20%. So what you do is what the NGEN Markets does is it actually presets it, but you can actually change it based on your own preferences. Once you do that, you can now review the performance of the entire portfolio. Now here the review parts comes in because we are doing the historical backtest. Now what you can do is from the last 5 years, what has been the cumulative performance of the asset, which is our portfolio, vis-a-vis our benchmark, which is our current index, which we have chosen. And you can also check the CAGR, which is compared here. So here you can see the CAGR is pretty lesser, 1% lesser than the benchmark and even the annual return. And the point here is you can also see that our volatility is fairly lesser than the benchmark. And you can effectively check the comparisons of Sharps and the Sortino ratio to gauge the risk adjusted return of any portfolios. Here you can see that most of the time our portfolio on a sense is not beating the benchmark. And that's one single review you can check that, if in the last 5 years, this current kind of a portfolio is not beating the benchmark, is it, sensible to have such a portfolio, or is it sensible to remove some funds or add in some funds or not? Similarly, you can also check the historical VAR. Now, historical VAR is called as historical value at risk. Now, value at risk is where you can understand the downside risk of any portfolio or even the securities. So for an example, in a 95% confidence interval, which we have shown here, there is a 5% chance, 100 minus 95, that the portfolio can have a loss of negative 20.92%. So negative 20.92%, whereas similarly, when we do the historical value at risk for benchmark, it's negative 21.48%. So apparently the benchmark is more riskier than the asset on a downside risk level. Similarly, on a implied value at risk. So historical is on the basis of historical daily returns, whereas implied is also behaving in a same way, but it is calculated on the basis of volatility of those daily returns. So volatility in the sense, when you calculate the implied VAR, where you see it, there's a 5% chance to have certain drawdown like negative 23.18% versus the benchmark basis, which is negative 25.36%. So here you can gauge any benchmark. Even if I change a benchmark, let's say 100% Nifty DRI, I can easily gauge that what if I hold the entire portfolio in an equity? What if the benchmark is entire 100% Nifty TRI? Is it risky or not? You can definitely see it's riskier. It's negative 26 for a 5% confidence interval. Now, what you can do is you can change the confidence interval from 95% to 99, 98 to change the probability. So let's say I want to keep my probability 1%. What I can do is I can keep it 99 here. Once I keep it 99, you can easily see what kind of a drawdown I could expect. So 1% chance to have such a loss, which is negative 39. But here you can see a huge, figure, which is pretty much higher than our asset and which helps us to determine that how risky is current Nifty TRI is on the basis of historical 5-year return set. So you can see this is the 5-year data sets which we have chosen. Similarly, we have a relative analysis as well. Now, this relative analysis against a benchmark is useful to determine if we have beaten the benchmark or not. And if we are beating the benchmark, are we beating it positively or negatively? So what about positive and negative sense? I'll just talk about this. So first thing what you can see here is this excess return over the benchmark, which is given here, which is a cumulative outperformance. And here it is in negative, obviously you can see here. And also we also have the annual return over the benchmark, which is also negative, which is an alpha. So annualized alpha is negative 2.39%, right? So on the basis of that, you can definitely state that it has not beaten the benchmark from the last couple of years, and that is how it is. It's back testing and comparing to the tracking error. Now, tracking error is where you can understand that if we are different than the benchmark or not, if we are tracking the benchmark closely or very far away from the benchmark. So for an example, a tracking error which is pretty high, which is like 9%, is shows that we are very different than the benchmark in terms of the behavior, right? And the info ratio is definitely a ratio of annual return over the benchmark versus the tracking error. It helps us to determine that if we are generating negative alpha, the info ratio will be negative as well. And it also helps us to determine that if we currently have a good closeness to the benchmark with an alpha. So here a good info ratio can be more than one, more than 0.50 or 1, not in negatives. So that is how you can take a look towards info ratio. Now talking about the capture ratios. Now let's take a turn and see that on a monthly basis, how do we behave against a benchmark. So here, when you see the capture ratios, you can see these numbers. Now, making sense for these numbers will be a bit tough. So what you can do is you can just click on this, and now you will see the breakdown of the capture ratios. So here what you can see, the asset versus the benchmark. Asset is our portfolio currently, and the benchmark which we have chosen. And what you can do here is that effectively compare the return sets of our assets. So definitely our asset has not given the return sets when the benchmark was up, when the benchmark was performing. We do not had that performance. Similarly, you can see the positive return sets. Here we are giving negative when the benchmark is up, right? So any point of the time, any dates, any month which you see, you can definitely see that our performance against the benchmark has not been well. Now, why am I talking about underperformances here? Because it helps us to determine that what are the problems in the portfolio, what the client is holding, and how can we address them. How do we address them? We have another tab which is contribution, which we will talk about that later in this session. And here we also can take a look towards the down capture ratio. Now, down capture ratio is another, wonderful way to understand that are we conservative or not. Conservative in the sense, when the benchmark falls, when the benchmark goes down, how do we behave? How do we backtest in the monthly return sets? You can definitely see benchmark has a negative 36 overall return on a monthly basis, and whereas we have negative 25.31%. And you can easily see all these data sets in the last 5 years, right? So this helps us to determine the behavior against the benchmark when the benchmark is up with the up capture ratio. So a good up capture ratio should be more than 100, and a good down capture ratio is here given here less than 100. So that's how the up capture ratios works out. And you can also check the monthly and the yearly chart, which helps us to determine that what are the up months and the down months. So what is the up and down months? It's just the positive and the negative months. You can easily see from the last 5 years what has been the positive and the negative months, how much percentage of the months were positive on a statistical sense, and how much percentage of the months were negative. And similarly, you can also see the average up months, positive months, and average down months. So, we are having a pretty similar average in +3 and -3 on an average for a up and down months. But you can see the best returns are generated by when the months are good. This particular portfolio generates a good return sets, in the entire set of the 5-year analysis. And the worst, you can definitely see the up and the down. So similarly, you can see the yearly stats. So yearly stats will show you the last 4 to 5 year return sets. You can see 100% of the entire year was positive with the volatility given here, and the best years and the worst year is given here. So here you can effectively change the dates. So the point is that this is very customizable. If I change this date, I will see different sets of stats to compare against and to come up with my own analysis. So let's say my horizon is, not 5 years, it can be more than 5 years. So I can choose, let's say, 2015. Once I choose this, now the entire performance starts will be in such a way that you can see all those data sets, and then you can determine if these all data sets are making sense for the client or not. But one thing you can see is constant. Like for an example, the capture ratio which you see, it's mostly below 100. So that infers that whenever the benchmark performs, this current portfolio do not perform as much as benchmark. And you can definitely see the down capture as well. So that's how this works out for the entire performance analytics of a portfolio. We also have another very useful tab, is like if you want to simulate, let's say, 30 lakhs from the last 7 to 8 years, what has happened to 32. So you can see the double of the amount here in the 65.61 lakhs being generated. So that you can easily simulate. You can even input, let's say, 20 lakhs, and it shows you the entire backtest based on whatever you have chosen in the value. Now, talking about, we saw the flaws in the portfolio. Now, what is dragging the portfolio down? What are those funds which are not contributing? Funds or the securities, because we do remember we have added couple of stocks here as well. So let's talk about the contribution. Now, contribution will help us to determine that from a one particular start date, which is currently chosen as 2015, till the current date, which fund or securities have contributed pretty well into the portfolio. The first thing what you can check is the contribution towards the return, which will show you out of 100, and which will show you that some of the funds, like even the stock, which is Sun Pharmaceuticals, which is highly allocated, is not a good contributor to the return. Number one. Number two, what you can do is you can also see the total contribution, total return. Now, total return is also very useful to determine that, like for an example, iPro credit risk. It's highly allocated, but has not given a total return sets as much as equity. Definitely it won't. So that's how you can actually see that if you're inclined towards return, am I highly allocated towards debt side of the portfolio? Or should I need to, rebalance my portfolio based on any particular set of allocations? That's how you can take a look towards and recognize funds based on one particular start to end date. Now here you can also customize the start and end date. To customize that, what you can do is you can choose to have, let's say, 2017 here instead of 2015, and you can choose an end date, let's say 2021. So let's say you want to simulate what would have happened from 2017 to 2021 if I would have taken such funds into consideration. So you can see that the exposures, the Nippon Pharma, DSP Midcap, the ICICI Bank, they have been a good contributor. But here you can see Sun Pharmaceuticals is a negative contributor now. So the point is that you can take a look towards those securities which are dragging the portfolio down based on the performance, or which are not the winners, right? And then you can, allocate accordingly based on the contribution analysis. Now here we have given couple of, tabs. We have given the sources of the portfolio return. When you click on this Nippon India Pharma, you can easily see the data sets being changed here. So you can see the allocation is 17% of the portfolio, the fund performance, the fund, this fund, performance, and the portfolio return itself. Now, what you can do is you can click on it, and you can easily see the second one is ICICI Bank Limited. Then we have DSP Midcap, and then it goes on. Once you click on these data sets, you can easily see the allocations in the portfolio, the fund performance, and the total portfolio return. And similarly, that is how this works out for the contribution analysis. And contribution can also be a very important key when you're also taking towards correlation. I'll talk about why it is very, very important. And, when you go ahead with the correlations, you would definitely want, a diversification in place. Now, here you can see there is a quite a diversification going on in the entire portfolio. But what about these figures, which you see here? One figure I could definitely see is Sundaram Midcap versus Aditya Birla Midcap. Now, both of them are having a very high correlation. A high correlation can be called which is closer towards 1, which is 0.96, 95, even 98. So this is a like 98 is given here, Franklin Flexi versus Franklin Blue Chip, right? So you can see couple of high correlated assets are there in our portfolios. So we would definitely want to remove one of them, and we would want to recognize that which one should we remove if we are considering for the removing of those funds. So what you can do is you can go back to the contribution again, And you can easily see, I can just reset this up as of now from 2015. I can easily see that, okay, the Aditya Birla is actually the better option when I compare the correlation of, other funds. So Sundaram versus, Aditya Birla. Aditya Birla is actually having a better contribution to the returns. And you can also check the total return in the, in that particular time frame. So you can see the total return between both of them, and you can definitely see if the allocations to Sundaram is lesser or not, or if the allocations to Aditya Birla is, higher or not. You can actually check that out in the contributions tab. Now here, when you click on it again, let's say I'm just clicking on Aditya, you can see 8% of the allocation is given here, right? So that's how you can take a look towards correlation and then analyze them. Another great way is to see that if you have added, let's say, two debt funds. So why these two debt funds, right? You can obviously see that money market and credit risk are having quite a correlation, but they are not having correlations with other equity funds. And that's gonna be the case. So that is how you can take a look towards the correlation. Now, correlation can, as portfolio analytics of NGEN also captures non-standard asset classes, and even, some asset classes, like for an example, I'll just gonna add it in front of. So if you want to edit this portfolio, you can click on this edit and save as, and I'm adding a non-standard asset class like gold as a commodity, right? So this is a, this is something which I have added as a custom security, and I'm also adding another one which is silver, right? Now what I am doing here is that, one second. Yeah. So what I'm doing here is that what I've added here as a commodity, I'm gonna run it in our system. And once I run it, I can then check my correlations. Now, these kind of analysis, when you check, you can definitely see that gold, on an other sense is, how it is correlating with each other. Now, these data sets are not the true data sets which I've added, but you can add any particular set of the commodity in our system and then analyze it in one single go, right? So that's how this works out for the correlations analysis. Now, the point here is that apart from correlations, we also have the portfolio overlap. Now, for the portfolio overlap, what you need to do is, all you need to do is just click on this compare button. Now, the compare button will help you to onboard all the individual mutual funds, and then you can do the portfolio, overlap analysis, which is called as positional overlap. So once I click on it, it adds all the securities in the system. And obviously, the overlap with, some categories like, custom securities and the stocks won't be possible. Only possibility what you can do is the overlap between the funds. So now what you can do is you can go ahead with the position overlap tab given here, which is, the seventh tab in the system. And here, once you click on it, you can definitely see quite a lot of diversification, but there is still a concentration. So concentration here is one of them, which we already recognized before. Two of them is, one is the Franklin India Blue Chip versus Franklin India Flexi Cap. So they are 50%, positionally overlapped. So once I click on it, I can see the funds, I can see the individual securities under those funds which are overlapping. So you can see the overlap between the, individual securities, and this is how the overlap works out. What we consider as the minimum, holding of that overlap as an overlap for each funds, right? And here, what you can do is you can also check the, other overlap as well. So either you would like to remove Sundaram or Nippon, you can take a call on the basis of, many parameters given in the engine market system, and then you can see the overlap here given into the system. Similarly, not just, one portfolio. If you want to review, let's say I want to review another portfolio, all I need to do is just I type my own model portfolio here to see if I'm having good overlap in my model portfolio. So all you need to do is just add other items here, and once you click on position overlap, you can see that the portfolio which I've made is pretty much not having that much of an overlap. Even if it is having, I can just click on it and I can see that, okay, 25% of the entire funds are overlapping. Another process I'm adding again. So it's a very seamless way to, come up with, checking overlaps of any clients in one single go. So this is one client which was added through the RTA connection. And once I check the position overlap, you can see there are some, highly positionally overlapped funds there in the system, like Kotak Standard Multi-Cap versus Kotak Equity Opportunities Funds. When you click on it, you can see these are the securities which are overlapping in the system. So that's how, the entire portfolio review for the system, NGEN market system, is concluded. And we can now start with our Q&A. So if anybody has any questions, I will now open the forum for the questions. So you can either write it on the chat box or verbally, and then we can address them.
Well, can you explain the total return column once again?
Sure, sir. One second, I'm just loading another portfolio. Yeah. So the total return for the contribution, right, sir? Yeah. So what you can see, sir, here is that this is the total absolute return for any particular set of a fund which is added in our portfolio. And when you choose a start date, like let's say a start date of 2018 till the current date set, let's say 16th February. And once you run it, it will show the total return of the funds, absolute total return from 2018 till 2023. So you
Okay.
can see that, even if it's devoid of asset allocation, you can see the only total allocation, total return based on the return set which the fund has generated. So as per what you can see, Axis Midcap is actually having the highest total return in all these funds added into the portfolio.
And then you said about two mid-cap funds, Birla and all that. Then how to compare? Or rather, choose one, Sundaram and Birla,
Sure.
where the
So I'm
total
just
return was.
right. So once you run this portfolio, when you go to the contribution here, right? What you can do is similar process. Let's say we take it last 5 years, and then we run the contribution analysis. And here, when you see the Aditya Birla and Sundaram, right? Now the point here is that from that date to the current date set, from 2018 to current date set, the between them there is no difference in the total. I mean, it's a very marginal difference between the total returns. The only problem with this is that Sundaram is allocated in the portfolio base. That's why the contribution is less. And you
Okay.
can definitely see Aditya Birla is 11% allocated, whereas Sundaram is allocated just 5.85. So keeping either I would keep Aditya Birla or Sundaram as based on correlations. You would either choose one of them. So you can either go to one of them, and inclination can be to Aditya Birla based on your own preferences.
Thank you. Can I ask one more question?
Sure, sir.
So in the category averages, where either say we see a category of large and mid cap, there are, don't you think, two columns of this upward capture ratios, downward and capture ratios would also be displayed, so that we can compare it with within the category averages?
Yeah, hi, this is Arnab. The reason we don't show up capture and down capture ratios in category averages is it because it's a relative statistic. So that would mean that that would be against a benchmark. Now, all these funds, as you know, even when they're in the same category, have sometimes have different benchmarks. So all the stats that you see here, they are calculated only by using the NAV, all the return stats. Up capture, down capture would require us to use a benchmark.
In large and mid cap, the benchmark is almost same, no? Or large cap will be BSE 100 only.
Yes. Now, I mean, there are a lot of other categories here also, right? So to add relative columns in here, the only way we would be able to do it is to select one benchmark for that category and then apply it to all the funds. The issue here is that, even if you compare the up capture of large caps versus the up capture of mid caps, they're against different benchmarks. So the comparison kind of, you can't compare anymore because they're versus two different things. So for this is the reason that in the comparison section, you have to always choose one benchmark to run against the funds that you have. Because otherwise, you'd be comparing relative stats in one case versus one benchmark, and in the other case versus something else.
Okay, so you mean to say it will be misleading?
Yes, absolutely. Because it's like saying I'm better than A and you're better than B. It's not really meaningful information, right?
Correct. Arunabji, since you are talking, I'll add one more question. Still,
Yes,
that
please.
one query is pending in dynamic asset allocation. You were supposed to write down net equity column when we see it in comparison, rather categories. Actually.
Yes, sir. So this is in the process, sir. So this is definitely in the list. I am aware of it. So we will be adding that column soon. I mean, right now you just see equity, debt. There will be another column coming up saying net equity. So that is, we already obviously have the data for all the ones that have any derivative positions.
Yeah, it's long pending.
Yes, sir. We'll get that done. We have just released a couple of other features, but this one should be coming soon.
Yeah, thank you.
Thank you. There's a question saying, how do we get IDCW funds in the compare section? So we don't support any dividend funds in the compare section, obviously, because of the NAV not capturing the entire return. So the as you can see, even when you add a security in the compare section, where you add a fund, it says growth only. So the compare section only supports growth funds, not dividend funds. That's the reason that you won't find them there. If you still want to see it, you can search for the fund right at the top.
Okay, this is Rajshekar here. And just it's not here, but it's just a wish I'm saying.
Yes.
If possible in future, is there a way we can show the historical valuation of large cap, mid cap, small cap, like that, just for us to know whether particular thing is right now overvalued or undervalued kind of stuff?
So, do you mean of stocks or do you mean of fund holdings?
Funds, mutual funds. I just want to know, see, if mid-cap indices, for example, large, 10-year average valuation is, say, some PE 22, 23, whatever it is, and today what it is.
I see. Okay. We can find out. But in this case, you're looking at a particular stock, or you want to generally overall in the market?
Overall of the market, and then we will make a choice whether we want to put in the mid cap, we want to overweight on mid cap, or whether we want to stay away from mid cap or small cap, like that.
And you want to see valuations, because I mean the index is already there in the market section. There you can easily compare performance, but you're looking for a valuation.
Where is the index in the index?
May I just go to the market section once? There you can just put very easily, you can do this. Even in the compare section, you can do it. So Nifty, mid cap, small cap, large cap, just add the three.
Yeah, but that's just an absolute value of where it stands, right? It's not.
Yes. And you want to see what, sorry?
Valuation.
Valuation. Okay, understand. Okay. We will find out.
No, it's a bigger wish, but it often happens to our mind that, should we go overweight on large cap, or should we go overweight on small cap? This is the choice in front of us.
So sir, I'm aware that we get PE data for the index as well. Will that help?
Yes, to start with, index is fine. Later on, we will see whether that particular mutual fund, where it is. For fund you have already given here, PA, for example, Kotak Flexi Cap, it shows 25.68. But is 25.68, of course, in a fund, it may have less meaning, but in individual stock, it has more meaning for us. Just if you know the index, this thing, at least we know whether I want to go overweight on large cap, mid cap kind of stuff.
Got it. Okay. We'll find out if that data is available.
Level PE value may be meaningless because some funds by design have higher PE.
Okay.
By their strategy itself, they will have higher PE and all. But if I know index, I at least know that market is where the market is positioned.
So the PE that I meant like we get PE for the index also. So the Nifty small cap index, we get PE data for that.
Is it there here?
No, not on the platform. We have the data, so I'm wondering if that will help.
Right.
Okay, so we can take a look at that then.
All right. Yeah, thank you.
Sure. There's another question saying portfolio overlaps in the compare section, that it should also show the uncommon stop. So yes, this is also a feature that it's in progress. So we will get this out as soon as possible. Last couple of months we have been working on some new stuff. So you will see a technical analysis section coming up. You will also see a entire new section for strategies coming up. So we have been slightly delayed with some of the feature requests, but this is definitely on the cards, and it will get done soon. Any other questions, please let us know on the chat or just online.
Arunanji, can you explain this relative column where even a Nifty 50 is written, and or Umer?
Yeah. So may I just scroll right? So basically, these are just columns for that fund where all these stats, as you can see, are calculated against a benchmark. And in this case, the benchmark you can choose on the top. So may I just change Nifty 50 to something else? And you will see that the relative columns will change values. But the return columns will not, because they are based on the NAV of Kotak FlexiCap, etc., etc. But the relative columns are basically, versus a benchmark. So cumulative excess return is in total, how much is it? What's the difference between this fund and that benchmark that you've chosen? Then annualized, so it's this annualization of that number. Then this is the beta between the fund versus the benchmark, tracking error, and then obviously information ratio and correlation. So these are, we've showed them separately because they are not based only on the NAV of the fund. They're based on the NAV of the fund versus something. The green ones are return columns, which are purely based on the NAV of the fund. So we have a question saying, can we do attribution over 1 year for a particular scheme? So attribution isn't something that data is actually available for. The holding data, and by attribution, I'm assuming you mean how much, let's say, an individual stock provided to the return of the fund. So, but if you look at any fund's holdings, they are basically provided on a monthly basis. And if we use the stocks that, let's say, this particular fund is holding as of 31st Jan, the only other information we have before that is 31st December. And if you actually use these stock holdings and calculate the return, it does not match the fund's return. That's because we don't have the underlying transactions of the mutual fund. So any kind of attribution analysis with the data that's currently available for mutual funds is not really possible. And even if you conduct it, it will never match. So that's the reason that we don't show attribution for any schemes, because the answer will almost 100% of the time be incorrect. So having said that, you can, for example, do a theoretical exercise where you take the individual stock weightages here and then multiply that with the performance to see if the fund's performance matches that number, but it does not. And there are many reasons for that. One of the reasons is the fund could easily be changing positions between 31st November and 30th November and 31st December. We don't know that. Secondly, we don't know at which prices they establish these positions. Is it at the closes in the morning? So, these things make a huge difference, especially with stocks. So the attribution data will never match unless we have underlying transactions of the funds. So the only real place to get attribution data is actually the AMC itself. There's another question saying number of securities that each fund holds in the compare of the fund section. Okay, so number of securities is something that was requested, and that's in the pipeline. IDCW funds and compare section, as we said to the first question, because they are dividend funds and the NAV doesn't reflect the performance. The compare section only supports growth funds only. So for the comparison section, unfortunately, dividend funds cannot be added here. If you still want to do some analytics, you can always search for the fund on the top to see further details. But again, it's just NAV. We don't currently have dividend data for IDCW funds. Any other questions, please just write on the chat, or you can unmute and ask. If there's nothing else, then maybe we can close for today.
Sure. So thank you so much, everyone, for visiting this session. We will come again next week, Friday, 4 o'clock, with a very interesting topic, and we are actively doing our updates as well. One thing I would definitely want you, everyone, to check out is our updates panel, because updates panel actually shows you all the new updates which we had previously. One of the update is, that you can now add all the top 50 securities in the compare section. So when you are in the fund section in the screener, all you need to do is just click on this add top 50 to the compare, and all the top 50 will be seamlessly added into the compare section. So you don't have to click one by one. This is one update which we have. Another update is what we have is the rolling analysis. So within rolling analysis, we have now given the probability based distribution. So that is also our new update, which taken as a feedback from all the clients. So once this is loaded, I will show that as well. So this is, these are the updates what we have. The point here is that you can take a look towards the Twitter which we have. We are actively sharing our data sets, actively sharing our insights, and you can also go ahead and check out our YouTube channel. So that's it for today, everyone, and thank you so much, and have a nice weekend ahead.